Chief Investment Officer of Morgan Stanley says sell half your bonds and put 20% of your assets in gold. What did he just say? These are the guys that maybe would have said 5% and probably not even. Sell half of your bonds and buy gold. He said it's no longer the 60-40 platform that Wall Street's used for 50 years. 60% stock, 40% bond. No, make it 60-20-20, 20% stock. Michael Hartnett, the chief analyst at Bank of America, his newsletter is a fortune. Thousands and thousands of dollars a year. It goes to the institutional traders. He says, no, 25, 25, 25, 25. So have 25% stock, 25% bond, 25% short-term treasury, 25% gold. And maybe the craziest of all is the bond king, Jeffrey Gundlach. He says a 25% allocation in gold is not overweight. Now, these three guys, Chief Investment Officer Michael Hartnett and Gundlach, they're not speaking to the plebes. And the plebes are all of us. They're speaking to the institutional traders up at the top. They're speaking to the people who have brought in hundreds of billions of dollars of metal into COMEX since last November. Billions and billions and billions every month. Who the hell is it? Not a word on who it is.
Schectman argues this is all building toward a 2026 reset, with Judy Shelton suggesting Trump may peg long-term treasuries to gold on July 4, 2026, to restore credibility and drive manufacturing back home. Major institutions are already shifting. Morgan Stanley's CIO says to sell half your bonds for gold. Bank of America recommends 25% exposure, and Jeffrey Gundlach calls 25% not overweight. At the same time, big players are quietly draining COMEX and the LBMA, while retail investors remain unaware. Schectman believes insiders are positioning for a major revaluation of gold and the dollar. Thanks for watching. Subscribe to Fine Metal for more updates.
The Genius Act creates synthetic demand for the U.S. Treasury and helps fund all of our deficit spending in a world where the treasuries aren't as sought after anymore as they once were because of weaponization, because of fiscal irresponsibility, creating $1 trillion in 71 days. Let's not forget how big a trillion is. 1 trillion seconds ago was 31,688 years ago. So you have this vehicle called the Genius Act, which is diabolically genius that anytime money moves, and it's not a CBDC, central bank, it is created by private institutions that are governed by the Genius Act legislation. So the feds will control the on-ramp and the off-ramp, similar to a CBDC in scope. But what it really does is create synthetic demand for the short-term treasury, pushing down interest rates. The key to it is that the interest rate is not transferable. So what are they doing? They were at Beaver Creek Mining Summit. They have $13 billion in gold. They have 10 or 12 billion in Bitcoin. I believe they will use gold, the continual accumulation of gold, to help devalue the dollar. And I believe personally that they will use Bitcoin in an effort to pay down the debt, which could mean that you see an occasional rug pull, maybe, maybe not. But what I do believe is that they will use it for that reason. This is my own personal belief, right, wrong, or indifferent. That's one half of it. What about the back end of the bond market? Well, Judy Shelton has been on my podcast twice, once with me about 7 months ago, once with Michelle McCory last month. In it, she says, Andy, in no uncertain terms, Trump has told me, when I was part of the transition team, that he will peg gold to the back end of the bond market on July 4th, 2026. She says this, and she sticks to it. It's in her book. And she says he will do that, and that's the 250th anniversary of the country. He will do that to reestablish credibility. This is not about money because the banks are loaded with it, relatively comparing to what happened in 2019. It's about trust. The banks are looking at each other and saying, nope, not lending, not even for one night, because I'm not sure you'll be able to pay me back tomorrow morning. And that's because repo stress usually, and this matters because repo stress usually only appears right before market corrections, like in 2019, like in 2008. And history has shown that markets can unravel very fast when you see this environment. This pushes the Fed into emergency action, like we saw in 2019, whether they want to or not. And so in essence, what I would say to you above all is that this is far more than just the Fed coming in and providing liquidity. The liquidity is there. What they're doing is providing liquidity where the banks trust the Fed and not one another. And that's something that's very, very interesting to me, and it portrays, in my opinion, a market that is far more fragile than we are being led to believe.
Andy reveals that the United States government is creating controlled dollar debasement while quietly building large gold and silver reserves. He says the Genius Act forces stablecoins to buy U.S. treasuries, and companies such as Tether use the interest profits to purchase billions in gold, copying the 1933 strategy of gathering metals before a currency shift. Schectman points to key signs: heavy silver inflows into COMEX, government involvement in major mining companies, silver listed as a critical mineral, and China hiding the real size of its reserves.
The U.S. just reclassified silver as a critical mineral amongst many others, and the amount of gold and silver that have been brought into the COMEX since last November is off the charts. And somewhere in the neighborhood of 200 million, but there are reports that just came out in the Financial Times that said that governments around the world are reporting roughly 1/3 of their official buying, down from about 90% 4 years ago. That's according to the World Gold Council. And then China, which is the world's largest producer and consumer of gold and the second largest of silver, certainly not being transparent how much they own, 10 times, they assume, more than what they are reporting. And they're also, they just came out and said they're going to limit exports. They're going to tighten silver exports. This is a race, if you will, to accumulate physical metal. And I think the government understands that, not just physical metal, all critical elements. And I think it's no longer about promises from a broke country, in other words, taking our treasuries, and more about who's got the real stuff. You can see this in the amount of deliveries coming off of all of the world's exchanges. You can see this in how the people that are importing hundreds of billions of dollars of metal into the United States are the most, not just the most well-funded traders here in North America, if not the world. They're the most well-informed. But that goes hand in hand with what the central banks have been doing. The first podcast I did with you years ago, that was probably front and center what we talked about, how the central banks have been buying gold. Here you have and silver and other commodities, that you have the most well-informed traders in the world showing you what they are doing. And it's gotten to the point now where there's no reason hiding it any longer. And in particular, if you do want to debase or devalue the dollar, you do it in raising the price of all of the world's commodities, because we've become too accustomed to measuring the currency against a basket of crap currencies, the dollar index. It's not how you should do it. Dollar is down 8 or 9% against the dollar index. So how do you bring back manufacturing? Well, we got the front end of the curve handled. We know everyone keeps talking about devaluing or revaluing gold and devaluing the dollar. James Rickards is saying 24,000 for gold. Mike Maloney says 10,000. Pick your number. The higher the price of gold goes, the more devalued the dollar gets, which helps sell manufacturing to the globe. But how do you get your manufacturing back? Well, Judy's right, and you have treasuries. She says starting at 50, may not have as much demand. She said maybe a 1% interest on the 50-year treasury at most, redeemable in gold. But in her book, she says 5, 10, 20, 30-year treasuries, redeemable in gold, 0 coupon. And she says maybe they'll issue stable coins off of those treasuries too, is what her belief is. But if you have treasuries that are redeemable in gold that have no upfront borrowing costs because there's no coupon, you can bring back your manufacturing at 0 upfront borrowing costs and let gold rise, maybe revalue it at some point, to sell your products in a massively devalued dollar. In other words, what I'm getting at is that I do believe that they want to lose the reserve status in order to defend the bond market, in order to bring back manufacturing, because any way you look at it, if we don't bring back manufacturing, we're broke, we have a country that's uneducated, we don't make anything, and AI is killing many of the jobs. So what do you do? What do you do? How do your children and your grandchildren survive in a world where we are reliant on everyone else in order to manufacturing things, and nobody wants our treasuries anymore because we have chosen, as you can see, we have chosen inflation long before we will ever deal with austerity. So I know that's a lot to unpack, and I'm sorry for going down that big road, but I think they're all connected. And in order to understand the Genius Act, in my mind, I think you have to look at potentially all of the other things that could happen in conjunction with it. Right now, something just happened that I think people need to be aware of. Nomi Prince did a great job in writing about it. And something is happening beneath the surface of the financial system, no question about it. And that's the thing that right now I think people need to pay attention to. And it's hard to pay attention because it's not really in your face. You know, the mainstream media doesn't report on any of this. And you're, of all the people I interview with, you are top one or two most well-informed. Now, I don't know if it's because you do so many interviews or because you're like me and read 3-4 hours a day to understand what's happening, but you always have pushback, and the questions you ask me are always well-informed. But you won't find any of this stuff on the mainstream. What I'm getting at is over a 5-day stretch over the last 2 weeks, the Federal Reserve, which has been talking about ending QT and maybe going back to QE and lowering rates, but what they did when no one was looking is they injected $125 billion into the repo market. And they call it in an effort to ease funding stress, right? Which I don't believe, and I'll tell you why in a second. First of all, an injection of that kind of money, $125 billion in a few days, is crisis-like behavior. And it's pretty much on par with what we would have saw when Lehman Brothers collapsed in the great financial crisis in 2018, and almost exactly what we saw during the 2019 repo blowout where the overnight lending rates went up over 10%. First of all, for people to understand, the repo market is the plumbing of the financial system. It's where banks lend to each other literally overnight. And this keeps everything flowing. Normally, this market is quiet, and that means everything is working. You never hear about it. But when the Fed suddenly steps in with huge amounts of cash, it's the equivalent of hearing a loud banging noise inside your walls whenever you turn the water on. Something isn't flowing right. But what makes all of this really concerning to me, Jay, which is so different than the 2019 issue and the 2008 issue, in both of those issues, they call it a liquidity problem, right? The banks didn't have enough money and they needed liquidity. The Fed had to come in and provide liquidity. And that's exactly what we saw back then. This is not a we're out of money problem right now because the banks have twice the amount of money that they did on their balance sheet. When I talk about the Genius Act, to me, I would say one phrase comes to mind, and that would be synthetic demand. So in mid-2025, as people probably know by now, the U.S. passed the Genius Act formally, and it legitimized fully backing privately issued stablecoins. And it's I guess its real impact is that every new dollar of stablecoin demand becomes a new dollar of treasury demand. In other words, when dollars are created in any form and they move throughout the ecosystem, they have to be backed by or connected to stablecoins. So the concept of checks and wires will be gone. Your money will transfer like that across a blockchain network, similar to Venmo, similar to Zelle, only it will be connected to all money. And so when you talk about, and there'll be short-term treasuries. So first and foremost, what you are doing is you are creating synthetic demand for the short-term treasury, and or call it financing even for short-term treasuries. Now, the interesting thing about it is that the interest that comes from the treasuries that backs the movement of currency, whether you're buying a pack of bubble gum at the gas station or paying for your kids' college tuition or buying a new home, all of it is going to be moving via stablecoin, which is backed by treasuries. The interest on those treasuries is not transferable. So that's first and foremost, but it's going to push down interest rates on the front end of the curve synthetically. It is going to, in essence, fund a growing share of the United States deficits, and without any direction from the Fed. This is going to be done just by the movement of money. But what's interesting about it is that that interest isn't transferable, companies like USA Tether, whose CEO is a man named Bo Hines, who was Trump's crypto czar through August. And now he's benefiting from the rules that he helped implement. And what you're seeing with a company like Tether, what they're doing with all of this profit that they're earning from issuing treasuries, backing the movement of stablecoins, is they're buying commodities, in particular gold. Over 13 billion, I believe, at last tally, of gold that they're buying, which would debase the dollar. Triffin's dilemma is the economic theory that says as the world reserve currency, you can't do it, because the world needs more dollars than we can provide them through trade alone. And so they, in essence, currencies over time, countries over time have to sell their currency to buy ours. It weakens theirs, strengthens ours. And over time, the continual purchasing of our currency or our exporting of dollars creates an imbalance where those currencies are so much cheaper than ours in relation that manufacturing naturally flows to the countries where it's less money to produce. And so you hollow out your manufacturing. You can go back to the previous administration, the knucklehead Jared Bernstein. He was a knucklehead. If any of you have watched him try to explain the issuance of treasuries, it's truly humiliating. But what I will say is that he did write a report called Dethrone King Dollar, which advocates for this, that we can't be the reserve currency anymore. It is too much of a drag on manufacturing. The vice president of the United States currently, Vance, said the same thing on White House letterhead, that the world reserve status, because of Triffin's dilemma, has been a boon for the consumers. Low interest rates, cheap goods, high asset prices, but it's been too much of a drag on the manufacturing base of the country. A country where 60% of its population currently has a literacy rate under that of the sixth grade. No formal education after high school, if that, and a sixth grade literacy rate for 60% of the country. A country that's 38 trillion in debt, with the last trillion in debt happening in 71 days, but that excludes the 175 plus million in unfunded liabilities, Medicare and Medicaid, Social Security, military and government pensions. A country that is in essence broke, insolvent, has no manufacturing base, and AI is going to chip away at many of the entry-level jobs. 50% is the current estimate within a half a dozen years or less. If we don't bring back manufacturing, we're dead. So how do they do it? Step number one, reshore all the gold and silver, as we've been seeing huge amounts. They say it's tariffs. No, it's not. I've been screaming that for 8 months, 9 months. It's reshoring. Step number two, create the Genius Act.